Thank you, Andrew. Welcome back, Steve, Ralph, and Andrew. We'll just go straight to the questions from the audience, even though I prepared some really tricky ones for you. But the audience actually saved you with lots and lots of questions. We have a very engaged audience today. And so the order of the questions I'll ask is probably in the order of popularity in terms of how many people actually want those questions asked. So without further ado, a big one here is AI and big data will allow insurers to avoid the least profitable and focus on the most profitable customers. Where will this take the public perception of insurance? Any of you?
So we're obviously looking at all sorts of. Can you hear me? Yeah. We're also obviously looking at all sorts of technology. The whole concept of AI. So 2011, a guy called Mark Andreessen published, I think it was a Washington Post paper saying software is eating the world. And the NVIDIA, the graphic chip CEO said, software is eating the world, but AI is going to eat software. And so everyone's looking at it. It's a very, very broad term. I think there's lots of interest in tech being built in the space, and there are concepts of like general AI that has full cognitive powers that will take over the world. There was a letter signed yesterday in Australia against autonomous weapons, so obviously we don't want AI applied to negative things. But the opportunity is in that specialist space, and a few of the insurance companies are looking at Watson, and some of those, some of the opportunities in the space to do claims management, to create chatbots, to optimize, that chart that you had. I think there's opportunity in personalising products, and ultimately trying to catalogue risk. The thing is that from an insurance perspective, and again, it's like limited insurance knowledge, is we can't go select just the good risks because government won't let it happen. We have to insure North Queensland and the storm threat. So yes, we may be able to use it in that perspective. I think for us, it's much more about can we use it to mitigate risk. IAG's mantra is making the world a safer place, and I feel like it's actually quite a genuine vision for the business. And so in the cyberspace, that's our interest. So can we assess and mitigate risk to help our customers so that we don't get the claim? So it's much more about using it for that than I think on the other side of selection of risk.
It's an interesting thing, and there's a continuum, and it probably leads then into an ethical question as well. I mean, what you're doing, essentially, insurance is diversification in two dimensions. It's diversification across a portfolio, and diversification over time. The more you can, the more individual you can price and assess risk, you're losing that diversification across portfolio, and then you're just diversifying over time. That if you take that to the extreme, insurance is nothing more than a financing mechanism, a pre or post financing, depending on when the loss happens. So far, I guess technology was a great inhibitor for diversification, or inhibitor to lose diversification across the portfolio, simply because we couldn't price and rate individually. So with the new technology, we are obviously gaining momentum there. And then I guess it's a question also society or the politics have to answer. At which community there should be community rating? I think you said, okay, Northern Queensland, there has to be insurance, yes. And I think, but that's a regulation that has to come from the outside. If market forces were just left to themselves, then as technology advances, everybody's trying to get a better rating in order to make sure that they're not being selected against. You have in the US, you have mechanism called residual market mechanisms, where there have been groups of risk which had difficulties finding insurance, and there was mechanisms were installed that these risks, for example, had to be pooled. So they had right for insurance, and this had to be pooled based on market share of market participants. So I guess it's something that needs regulation.
I mean, I'll add, I'm outside of the insurance industry, but what I see across industry is basically the challenge with big data initially. So looking at all this data that we have and starting to extract it and using it to eventually get advanced analytics in terms of ways to serve customers in a much more efficient way. I was been working with an insurance organization about the kind of robotic process automation, which with bots makes a lot of sense, but one of the challenges that I saw within the organization was the cultural adoption of this AI technology in terms of displacing jobs. So from an internal perspective, how do you balance that out? Because there's no question, if you see your competitors around you adopting artificial intelligence to do things much more efficiently, we've got to stay pace with that from probably a global perspective.
Thank you. The next question from the audience is, how would the panel suggest bringing the culture gap within insurers to bridge the risk versus innovation gap? I mean, we've heard a little bit about that from a couple of presentations. Any further insights?
Well, I mean,
within insurers,
yeah,
and perhaps maybe between insurers.
Okay, but I better step out. I'm not an insurer. Andrew, go ahead. You're probably best positioned.
Yeah, but I think that, you say between, inside the insurer?
But the question is within insurers, but it could be either inside or within the insurers community.
I mean, that's the point of the incubator.
Yeah.
So, and you know, it's collaboration with external businesses. So, you know, I think I was in, when I was in London, I was sort of talking to the Insuretech, the UK guys, and their take on the market is that in the Valley, it's all about disruption. So all the startups that start there is all about, I just want to change, to disrupt the incumbents. But in New York and in Europe, they're much more about collaboration. And so there's that opportunity to bring the fast-moving, different way of working from a startup perspective and the regulatory experience and the expertise you need in insurance together. So, you know, I think that outside in, inside out work will shift the culture. And a lot of it comes from leadership and the way they will push. The problem is that there's always this cost-cutting mandate inside big corporate. So you've got it's almost a balance between that, the innovation, and that side of it that you need to, you know, find some balance between.
I think I'd add to that in terms of the ecosystem. I know it's overused, but in terms of looking at universities, looking at agencies, looking at the private sector, and really combining the capability in terms of potential solutions, and then looking at things from a risk, I guess, or letting go of the risk. To your point, I think it's greater, the failure, it's greater than 90% in terms of the startups. So the dilemma is which ones do we invest in and how do we invest? And at the same time, how do we build this ecosystem that needs to move at a different pace than what a traditional organization in terms of their cadence?
Yes. And I guess the answer is a little bit just to build separate, to give it room to operate separately from the main business, both a physical room, clearly, but also outside the normal regulations, outside the normal processes, which are very tightly controlled in our industry. I think you just have to have a different risk tolerance within that space. Overall, clearly, you want to make sure that you're ring fencing it, that you're not betting the house on it, but within that space that you create, there should be different rules. Otherwise, it won't work.
And how do you deal with failure? That's kind of a critical question. Is there the appetite for failure, or do you know, because you need to make investments for the big wins, but what's the balance?
I think that first of all, you have to understand that you're working with a different risk profile and with different probabilities. I think that's the first part. Clearly, you have to articulate that. But again, I understand saying one thing and then doing another, and then doing it is a different thing. And I think we constantly need to remind ourselves as insurer that we are culturally different. And we need to make sure that, look, we can't apply our normal processes, our normal way of thinking there. We have to think differently. And also, again, by bringing in people from the outside with a different background.
Yeah, I mean, to go on to that, inside the business, as I've sort of had, there was a friend of mine wrote this blog called The 3%, and he'd run innovation programs inside IBM and Best Buy in the US. And it was sort of saying that inside, like, people select into a corporate for a particular reason. And it's not necessarily that they don't want to do work in the startup world, and there may be other reasons, but there are 3% of people in there who absolutely, if given the chance, will run. And that's, I suppose, what we're trying to identify, and it's trying to and like find them, get them into the incubator, and then support them on that process. There are always going to be 80% of people who are just interested in being there because that's what they chose to do, and the same in academia, to be honest. You know, the interesting thing for me, you know, about shifting the culture is really the 17% that sit between those two bands, that if given the permission, the training, the encouragement, they might jump into that 3%. And you know, and it's sort of, because you can't boil the ocean, so trying to make the whole business innovative is not going to work. But there's enough people in there who, if supported, will make a real difference.
Yes. And I guess the key thing is to balance the number of internal people who get involved versus the external expertise who come with completely different eyes altogether, right? Yeah.
So that's another thought, though. So I've tried to bring in external entrepreneurs, and it hasn't worked so far. And it, you know, for a bunch of the reasons, you know, that control incentive, type reason. So, so we're trying to, and we can do it with a startup because the startup comes in, we don't instantly take equity. So it's just like, we've got mutual benefit. They can distribute, we can build product, and that's awesome. If we can invest, that's the next level of it. But they're independent, so they're an independent entity, but trying to bring them in as entrepreneurs in residence hasn't quite worked yet. So it's still a model we're like trying to explore. And often it's trying to find the people who actually had experience in corporate, so they kind of understand. So yes, you have to do this training, and yes, you have to use that HR system and other things. So there's that sort of thing. And yes, there's this hierarchy, and we have to, because I'm an employee, I have to tip my hat a little bit. I do have to tip my hat to that. So, there's how does that, can I shield them from that completely? No. So, we need to improve on how we can do that.
There's a concept called distributed intelligence, and we look at modern organizations, and you have a whole bunch of capability and big thinkers across the organization. How do you get them involved in the process in terms of the frontline staff? I thought I read about IAG in the past, looking at tapping into those insights, because when we start talking about design thinking in terms of our customers, they're really at the front line. They can see things that as an organization we can do better. Are you finding that from your organization, that you have effective ways of tapping into that distributed voice?
Yeah, yes, but they're split from what I do. So absolutely, there's continuous improvement going on all the time. And there are, within my team we run an ideas platform, and that's used by the front line. So they do, they're encouraged to think always about the way they can do their work different. So that's much more at the, that Toyota production line end, where, so Horizon 1 type stuff. Because insurance companies are relatively siloed, people have expertise in underwriting or in customer service or in claims, and so the innovation tends to fit better into that model that comes out of the business, rather than people who cut across and can build new end-to-end products. And so that's a little bit more difficult. And before we restructured with the Australian division in Australia anyway, but New Zealand runs the end-to-end business. Now Australia does. But apart from the CEO, it was only my product leads who actually did end-to-end businesses, who were on the phones to customers 1 minute and then thinking about product strategy and how we're going to get funding and where's my tech guy coming from. And so hopefully that'll bring an organisation that can produce more end-to-end ideas. But it's absolutely critical, and we need to keep competing in that in that space. But for us, it's about thinking a little bit further out.
Great, thank you. The next question is about regulation, and we don't have a regulator on the panel, but the audience is asking for your view on what extent are regulators assisting or hindering Insuretech, and can they ever keep up, in your view?
I can start.
Anyone dares to be unpopular with regulators in the crowd?
So there's a new bank in Australia called Tyro. So it's been around for a couple of years now. Started by a German guy called Just, who came and did a talk at a thing I was at, and he was incredibly positive of the regulator. So he's a tech company with a banking license, and I kind of, it sort of stuck with me all the way through building out Firemark. Is regulation is incredibly important because we're dealing with a forward payment here, and people need confidence that they're going to get paid at the end of the day when there's a claim. So we have real trouble going into the market with, so we add backed by IAG to our new products. If we didn't do that, people just don't trust it. And so the regulation actually provides a base for trust in the industry. And so they're very open, and certainly the Australian regulators, they haven't worked it out yet, but they're very completely. They took the UK model and tried to apply that to fintech, and now they're thinking about it in the insurance space. So giving people the opportunity to sit in a sandpit, so you can have a certain number of customers, or a certain amount of money on deposit that you can then go and build a bank off the back of, that's much like from 50 million down to 2 million. So they are shifting things significantly. I haven't seen anything happen in the insurance space particularly. I mean, in the fintech space, I only had 3 candidates try it last year, so it's not massively popular just yet. But I think that also correlates to the amount of innovation that's going on in the space. To be honest, I don't see a huge Insuretech market in outside of Europe and the US right now. So the startups I talk to, anyone who it's typically like they've just got a different opportunity in the market, and we can add insurance into it as opposed to them ever thinking they were in Insuretech. And why would they want to go do it? Because it's so complicated.
I mean, the brief of the regulator is to safeguard security, to provide that sort of security for the public. So that's the main brief. And obviously, you see a lot of regulation internationally has tightened and has become stricter and stricter. You're talking about the first line of defense, second line of defense, third line of defense, which currently is sort of the best practice standard. What you're doing with all these lines of defense is control loops and feedback loops is you're certainly eroding some of the entrepreneurial spirit in that business. And I think that's what we're seeing now, that we are lacking momentum, we are lacking innovation, and therefore we are adjusting that. And gladly, I would say, most regulators are realizing that and addressing that too. I think that they said, look, there should be what they call a regulatory sandbox, and said, okay, we have to try and try things as well and be open to discussion. And I guess that's a new development.
Do you get around that, though, by, my view is from the outside looking in, by setting up an innovation lab? You don't have the legacy systems, and you might have the limited regulations that enable you to innovate more effectively. I mean, that's a view. Is that real?
So, I mean, for me as a startup, I wouldn't want to deal with that whole regulatory back end that you require, the capital and the rest of it. So, you know, the model that I see is us sitting between the regulator and the startup and providing them regulated capital,
Yes.
that's what you call it, so that they can go out and do their thing. So they're good at distribution and they're good at customer service and their tech may change the way we can build products and things. And then to forget about that back end part of it and pass that back to us. And you know, then it's a symbiotic relationship for the parties. And for me, that's a positive thing. You know, the interesting one, I put up Metromile there. So they started off as the startup that just did distribution, then bought an insurance company. So they obviously felt like, okay, this was core to our business now. I mean, they raised $200 million to do it. And so now they are full stack, but they didn't start off that way. So obviously, you know, you get to a certain point where you probably don't want to cede off too much of the risk or go straight to the reinsurers and get rid of the carriers or whatever. So, yeah, you know, I don't think we necessarily need to open it, but I also like worry when corporates say, you know, try and stop the regulations being open so that people can play.
I just have something to add as well. My experience with regulators, particularly with financial services, is in their engagement with the Fintech NZ community. Now, our strategy as a community is not to take a lobby or a kind of advocacy approach in the traditional sense, but we have MB and FMA directly involved in the core working group for Fintech NZ. And what we've seen in the last 9 or 10 months is direct engagement with the financial technology community, really immersing themselves in understanding the issues and challenges that are created or challenged by technology, and then engaging with the mechanisms of regulation to actually facilitate closing the gaps or creating opportunities of creating better ecosystem platform. And the most relevant recent example that impacts insurance is when they engage with the fintech community across these robo-advice exemption introduction, and that was a very, very rich engagement as far as I can see. You know, so I think we do have a good regulator in New Zealand who just need forums or platforms to engage with the industry. Yeah. So thank again the panel for that last question. The next question is about consumers' ability to transport their data from one insurer to another, and how would that impact the market? And I guess this is probably above and beyond the shared claim registry that already exists. You know, how do consumers kind of share much more data across the sector? Any view?
I mean, in Australia, I know it's happening in the banks. I'm not sure where it's at in terms of insurance. The question is how valuable the data is from one insurer to another. I think banking, you know, is definitely, because it's a much broader suite of products. So I don't know how much it would shift. It would obviously make it life easier, which, you know, is a key thing. I think people will differentiate from a product perspective. Other people, again, like it's not necessarily my area of understanding, but
I guess I'd add, in terms of the distributed ledger, kind of the blockchain play, in terms of exchanging data from a reinsurer to ensure that, you know, that will happen. Or there'll be, when there's opportunities to do it much more effective, that makes a bigger impact on the business model. But I guess I would say from a data opportunity for people to share, if there's an opportunity in the market, I think that people will start to address it, or the startup community will start to look for models, new business models that are much more effective. And we see that in kind of the collaborative model right now, in terms of how communities of engagement are collaborating and sharing. And it's a generational thing. I think the younger cohorts I mean, you got to make some assessments, right? You got to call, how are they going to see data privacy? How is that going to impact? Are they going to be more willing to let it go?
I mean, blockchain's an interesting one, so obviously everyone's exploring it and things.
Yeah.
But I think that's the opportunity there is much more that it's a distributed market, and so you'll have lots of different players, and it's just, and so no one owns the data. It's just the data is utilised by the players in that, the people in that market as they need to. So a different person writes the insurance that manages the claims, that reinsures the risk, and so and for every case, there's a different set of players in the value chain. And so then you need the data.
So what you're saying is you don't have to worry about taking your data to the next insurer because it's already there, no?
Yes, and between lots of different parties. And so, you know, that will create a whole new business model as opposed to just passing over some claims and address data that would, yeah.
I would like to add a consumer perspective to this question because I think this is a good opportune time for that. So as a consumer, I wonder if there's one day where I can actually have insurance and banking and finance all seamlessly integrated around my life, my journey in life, my transactions, my purchases as and where and when I need that. You know, so from a consumer perspective, it's not so much between the insurers, but how does insurance fit into the rest of my financial life? And it's not just that, but how do insurers help me not just recover costs from risk, but actually manage and prevent risks from happening. You know, so there's probably a lot of data about me that if I share with insurers who understand risk really well, could actually help me profile and help me manage my risk more proactively and things like that as well. You know, so I think let's not forget the consumer's perspective of how they will actually benefit from all of these integration type of conversations.
Well, in a way, it's consumers driving it, isn't it? I mean, if they're dealing with multiple government departments, they want to put their information and data in one time. So I think you look from a government point of view, you see it in the UK, you see it in New Zealand. They're addressing that right now because, to your point, if we're talking about customer centricity, that's a pain, right? And how do we address that pain and make it simpler? Well, the customers, if you can provide that solution, they're going to thank you.
So my question is, are they? So look, it's this ideal, and it all makes sense, but and I think about telematics. So telematics has typically been used to track drivers to check their behaviour. So the people who select into it are people who have already got good driving behaviour. There are more in Italy and places they were forced to take telematics, and if you want it in the UK, if you want to reduce your premium, you have to put a box in. But it's done under duress. So people bringing all their data together and the trust that requires for them to do that, we're not there yet. The question is, if we can add enough value to it, then they'll give up the data. So obviously Facebook knows huge amounts about people's lives. Metro Mile as a user, and they don't do behavioural tracking, I don't think, but they provide a whole lot of value to the user of the Metro Mile app, including when the street sweepers are coming through, because apparently you get towed in the US if you're on the wrong side of the street at the wrong day. So they add a bunch of value. So in return for that value, people will give up some of their privacy. So the question is, can we add enough value? Can we partner with people who add enough value in the world to allow us to get the data that we could then create that type of thing? And I did a project with Barclays, and they were trying to do your data vault. And privacy-preserving data analytics is an interesting space in research at the moment about giving up just the right amount of data. So not giving up everything, but what do they need to know about me? So, you know, and you can do it in medicine as much as you can do it in insurance. So I think it's an interesting area, but there's a whole lot to be done before there's this ultimate vision, and do you really want to give all your data up?
I think that's one thing. It's the data versus any economic advantages you might have from that. But another thing is just ease of doing business. And I don't think we're good at that. I don't think we are. I mean, my personal experience, and again, I'm low tech, but just trying to understand what's the sum insured on my homeowner's policy. I mean, then they said, oh, when did I buy the policy? When was it sent to me? It was 3 years ago. Probably it sits in that cabinet there. I mean, there are easier ways. Yeah. There must be. Or I had to file a claim 2 weeks ago. So my son had an accident in a car. He lost the rear mirror, no major thing. But just the process. Then they sit there and said, there must be easier ways of doing that. And I think that's a long way to go.
And those will be the winners, right? That figure out the easier ways to make the experience
Absolutely,
much,
absolutely.
And the example of someone doing it is Pham in China. And so, you know, I don't know the full story, but they were a relatively small insurance company. They now sell insurance, banking and wealth management products. They went out to the market and looked at someone's life and said, we'll buy cinemas and all the things that are part of your daily life. We'll stick them on a single layer, a transactional layer. So we have the data and we have the payment details. We know who they are and then we can seed product into their feeds. And so they're adding value as all sorts of products that have nothing to do with those, but they provide them the data so they know what types of products. And I think that's an ultimate model. Whether I think they've gone for ownership rather than partnership, but it could be one or either.
That's great. Thank you so much. I think that's probably all we got time for. And I think I suspect that with the speed at which the banking sector is adopting open banking, it may be that the banks will start approaching insurers before insurers approach each other, possibly. Thank you so much, Steve, Ralph, and Andrew, for your insight, your time, and your generosity. Thank you.
Thank you.